Hi, welcome to another episode of Harrison Hobbies. Today I wanted to create a super quick tutorial on how to trade calls on eTrade. I'm by no means an expert here, so anything that I tell you should take with a grain of salt. This video is intended to be kind of a jumping in point, so it maybe gives you some of the fundamentals or helps you to understand what menus you're looking at. So please don't take anything I'm saying here as full truth. Go out and research it yourself. Make sure that I'm correct about all the pricing and such. But hopefully this video will provide a little bit of information on what the different screens show and how to calculate roughly what the pricing is. So let's dive in. So the first step to buying a call, so again, this video is only going to be talking about calls here, but to purchase a call, you're going to select your underlying symbol. In this case, because Pfizer just did their first production vaccine today, Tuesday, 12/8, I'm expecting their stock to go up quite a bit, so I wanted to buy some calls on it. Again, you'd buy a call if you expect the stock to go up. So we'll start with here, and we're going to hit trade. And then once we're in the app, we will go into stocks, and then we're going to choose options. So now we're in the options menu, and a couple of things to look at. Your calls are going to be on the left side here, and your puts are going to be on the right. If you're purchasing a call, then what you're going to do here is look for your date. So today, I guess the soonest is December 11th. You got a whole bunch here. So let's give ourselves a little bit of time. Let's go for March, right? It could be any time. And so basically what you're saying with all of these numbers here is you've got your strike price. So this is going to be the price per share that you will pay eventually if the stock matures in the money. And then for calls here, you're going to look mainly at the ask and the bid price. So in this case here, if we were to agree on a strike price of $42, I'm going to be paying somewhere between $3.65 and $3.75. So a call like this is referring to 100 shares. So one thing I skipped here. So your quick layout here is your last is going to be the price that was last struck between here. On some of these, sometimes these will look real funky. Maybe this will be $3 and it's 4.65, 4.7. So I don't really trust the last. I always try to put my value that I'm willing to pay somewhere in the middle there. So if you're blue here, that means you're in the money both for puts, because puts is assuming that the value is going to go down, and then calls are assuming that the value is going to go up if you're buying. So this is basically territory the stock is already at, right? So it's going right now for $42.20. So 42, you'd be in the money. 43, you're out of the money. So it's not there yet. So hypothetically, if you said, hey, by March 19th, 2021, I think the stock is going to be at $43. Well, if you assumed that, then what you'd be doing is you'd be paying $43, and you're also going to pay a premium on that. So right off the bat, at a 3.35, because you're buying 100 shares, that means you're going to give the guy selling this $335. And you're going to hold it until March 19th. And keep in mind, you can sell it at any time, assuming you can find a buyer. So in here, with the $3.35 per share, and realistically, it'll be somewhere in between there, because you can see 3.35 is the high end. So you'll pay somebody $335 today, and then in the future, you have the option to exercise at $43 a share. So if the stock were to jump up to, say, $50 a share, that's probably going to be worth it. You're going to have to do a little bit of math on your own, though, to figure out whether it's worth it to sell the shares, because, again, these are worth something, right? Somebody is selling these right now for $3.35, so you can sell. So, hypothetically, I think by March 19th, we'll be here, and then the other one final thing to look at is sometimes it's actually cheaper to be in the money. So you need to pay attention because, again, there's no algorithm or anything that's assigning these values. These are what people think they're worth. And so sometimes you can find good deals where, if you go down $1, go down 50 cents, depending on what you're looking at, sometimes a tier lower will actually cost less than the tier above. So in theory, you could save yourself 50 cents eventually, or, times 100 shares, $50. So with Pfizer having released their first vaccine, we've gone up quite a bit today. We're almost up $1. I think we've got a lot of upward trajectory, assuming the vaccine works and doesn't kill everybody. So we're seeing here, there's tons of volume here, right? You got $3.40 per option, per option, and then there are 734 people selling. So, and now 1,200. So now you got a big, big cash cow in there trying to unload some volume. So, and if you look through here, you can see certain numbers, people, what they think. If you are really comfortable in the money, then you do that. So if you were to buy one share today, you're not really paying, you're paying essentially, you're taking a $42 share, you're going to pay somebody $43, and you're going to add another $3.36 on top of that. So you're actually at what, 46.36. So in order to break even, that stock realistically doesn't end at 43, it'll end up at 46.36. So that's one of the nuances there. But let's go through the process just to check this out. So we'll click here. So there are two. So whenever you're buying the thing, buying the share, you'll click Buy Open. Okay, so now we select price and term. We've got this selected now. We're right out of the money by roughly 80 cents. We'll select price and term. So now we're here. And then price type, we'll go to limit. So you could do market if you're comfortable paying $3.40. But we'll go here and we'll see what we can get. Actually, because we're creating a video here and I want it to go fast, we'll just go to market. And we'll preview. Oh, we forgot term. Problem with the small screen, you don't see all this. Good for the day. We're going to preview. So this is going to cost me $340 in the contract price, right? The premium per. And so that's money I'll never get back. Let me rephrase. So the $340 is what I'm paying now. If these stocks expire worthless, if I'm unable to sell them, then I will give the guy selling these $340, and then that's end of story. If at any time I want to sell, I can sell it just like a regular stock. So we're good here with place order. Okay, it was successfully entered during market hours. PFE. So now we're at Pfizer. So we can see here that we have, so now here's our Pfizer call. We have already made 99 cents, so that means that the person that came in right after us ended up paying $1 extra. So that's pretty good. And so if we wanted to exit this, so now, again, this is going for $3.37. If we click here, if we wanted to get out, I guess we can go to quote details, and that'll show us everything that you'd see with a regular stock. See it ticking up because everybody's interested now. Pfizer here, and if we wanted to do this one, we'd hit sell close, and then you'd go in here, you'd enter the number. I don't think we covered this whenever we were looking at the buying, but just like you'd enter the number of stocks you want, the one here refers to I want one call option, 100 shares. If that were two, that would be two call options for 200 shares, and so you just double all your prices. But now I'm in the sell screen here. I'd enter one because that's many I have, and then I can either go to limit or market, or the other options. So you'd put in as much as you'd want. Those are your, your bounds that you should probably stick within, unless you want to go big for maybe a future sale. But again, the duration here is only good for the day. So unless you want to do this every day, make sure your max price, if you really do want to sell, is realistic. Then you'll hit preview. And then if you wanted to sell this, you'd hit place order. And then we would have made a couple of bucks right there. So that, at a high level, is how we go through the navigation here, the menus, and hopefully you can feel a little bit more comfortable with how the whole process works. And that was a quick tutorial on how to trade options in eTrade. So thanks for watching, and check back soon for more videos.